It's interesting. History, it may not repeat itself, but it does rhyme a little bit. And if you always watch the tea leaves, you could always see it coming. And it happens for different reasons. But go back to 2008, there was a lot of banks that actually were shut down, and the number was in, the hundreds of millions, if not billions. And this year so far, there's been at least three or four, and the amount of asset cost that's been, currently this year from what it was in 2008 is almost identical, except in 2008, there was like 24, I want to say, banks that shut down to like four or five this year. And let's talk a little bit about First Republic Bank, which has been seized. And a lot of people ask, what's going to happen next? So we know First Republican Bank has been seized. What's going to happen next? Well, this is what it looks like. When a bank is seized, it means that the government has taken control over the bank and its assets. The bank is then sold to another institution or liquidated. So last Friday in April, the stock was down 97%. The stock was down 97. I want you to think about it, 97%. JP Morgan comes in and they buy it out. I'm sure pennies on the dollar or whatever their play was. And in the end, because JP Morgan's much bigger, there's the whole too big to fail mindset. But now JP Morgan is buying things on discount here, especially when they took over that bank. The biggest question that always happens when it comes to folks when they have the money in the bank, they'll say, hey, what happens to your money if you were saving it in First Republican? We'll use that as an example right now. So you're saving money in First Republican Bank. Your money is insured by FDIC up to $250,000 per account. If the bank is seized, the FDIC will step in and make sure that you receive the insured funds. Now, that's okay, but what if you had $1 million and you had it all in one account instead of four different accounts? That other 750 would be exposed. But when you have an isolated bank like this, FDIC is going to give you the protection. Here's the scary part, though. If, in fact, there was a multiple run at the same time on multiple banks, that's where the FDIC, at some point, we believe wouldn't be able to cover this. And in that scenario, you're going to go back in time to what the Depression looked like, because that's when there was a massive run on the bank. It almost happened in 2008. It didn't, but just think, since then, they've printed over $15 trillion. So is JP Morgan doomed to fail too? Just because one bank is seized does not necessarily mean that another bank, such as JP Morgan, is doomed to fail. Each bank is unique and faces its own set of challenges. So as I understand it, the bank out in Silicon Valley, they had a management team that was below par. They weren't on the level of these New York people that know how to manage these banks. This is what I'm hearing. And because of that, they found themselves in a situation where they mismanaged and miscalculated everything, even though they knew that interest rates were going to go higher, because it was like really telegraphed by the Fed. They didn't take advantage of it, and they actually made bad investments. So just because one goes down doesn't mean the other one's going to go down. It's still an isolated incident. This is not a global incident right now. It's just based on how that bank is being managed. And why did the First Republican need to be seized in the first place? Well, the First Republican may have needed to be seized due to a variety of reasons. Let's talk about this, such as insolvency or failing to comply with regulations. Here's the other thing, though. As I understand it, fractional reserve lending, where if I have, let's say, $100,000, the banks loan out $1 million on that 100. So the bank loans out $1 million on that 100. So now all of a sudden it's a 10-to-1 ratio. That's because of the strategy of fractional lending. What happened is, as we understand it, interest rates went up, investments rate went down. This was a smaller bank, so their profit margin got squeezed. And because of that, they had to shut down. Predictable from that standpoint. So the question is, stuff like this, when it happens, what kind of impact does it have on the markets? Well, it creates a lot of uncertainty. It creates a lot of fear. Now, if it's a real issue where there could be a run on the bank, that's one thing. If it's an issue of how the bank was managed, which is what it seems like, that's another thing. But truly, at the end, it creates massive uncertainty. We know that rates are still going to go higher. And it also, puts you in a position where, hey, do you put $250,000 in multiple banks so you have that kind of protection? And more importantly, if your money was at this particular bank when this happened, what do? You just got to be patient, because right now I think we're in a time where it's not going to be hostile. I know that the bank in California, within 48 hours or 96 hours, they were able to kind of restore all that money. So I don't think it's like, the earth is going to end right now and you better go get all your money. Be patient, but understand that you never want to go past $250 per account. You want to get the max FDIC. But I'm going to just tell you this right now. If there's a run on the bank, that doesn't mean it's going to be protected. One of the greatest places to stash your cash and have much more protection from what we're seeing right now, because the mutual life insurance companies don't mismanage money the way these banks do. They have a much more strict policy of what they do with the dollars, and they certainly don't take any loans, and they certainly don't put it into newfangled products. You may want to put as much of your cash inside of an overfunded whole life policy to get protection if you're actually worried about a run on the bank. So, I mean, are we in a recession? We're not in a depression as far as I'm concerned. Are we in a recession? Yes. Does that mean your world's going to end because we're in a recession? Absolutely not. I think that if you look at some of the greatest companies, forget about that, because great companies do get born in these moments. But great individual investors, and I'm not talking people on Wall Street, people that own real estate, own businesses, that have a mental mindset of how to really kind of have their money work for them, they do well in these environments because they become a beacon of hope and people go to them for information. More importantly, if you're one of those people where all of a sudden you're liquid, or if there's somebody you know that needs help with their sales team or at least how to run their business, you're now in a position to get equity in these companies and be able to share your strategy on how you were successful, because whenever there's pain, that's when the listening gets opened up. The listening is not opened up when people are cashing in their 401ks to buy Bitcoin because it's running through the roof, or everything else that was happening on TikTok. Listening gets opened up only after pain or during pain. With that, go ahead and click the link below. If there's stuff that you, number one, like about our videos, put that in the comments. If you want other videos, let us know. But by clicking the link, one of the people here at Epic will sit down, reach out to you, go over our success process, and show you the strategies that we do that help you make informed decisions going forward.